Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so I wanted to do my weekly follow-up on the stock because it closed the week at a price of $4.07. Which is the fourth lowest weekly close of the new year, which might seem pretty bearish, but I actually think that this could be a good sign that we're closing at this level. We could have closed lower, but we didn't. And I do think that could suggest that the bottom may be in and or is near. And with January almost over, I do feel like February is going to be a pretty good month for the stock. So I just kind of wanted to share a few levels that stand out to me. And just my perspective. Hopefully it helps you in navigating this chart. And so looking at AMC a few videos ago, I believe the first one of the year, I drew this downtrending channel that price has resided in for some time, other than this breakout up to around $11, double top there. And then we pulled back into the channel. But recently, shortly after the beginning of the year, which is marked by this gray vertical line, we broke below the channel. However, over this past week, we did test the bottom of it. So, while it doesn't really seem too significant since we're lower than it, I do think it will be a significant level to break above once we get there. And once we do break back into this channel, break above it, I do see this nice gap to the upside right around $10 marked by the blue line. So I do think that there is a lot of upside for the stock, but patience is key. We're going to have to wait for it. But I do think that it will be coming at some point, ideally this year, and I suspect that February will be a pretty good month for the stock. And so what I see here is that the first trading day of the week, Monday, January 22nd, we saw basically a test of the bottom of that channel hitting a high on the day of $4.81. However, we did get a pullback. That is an inverted hammer candle that is bearish. That also we see this topping tail there that suggests that there will be a reversal. Since we were not able to get a close above that high of $4.81, we were not able to negate that reversal, and we started moving down. That's what we saw over the course of the week, hitting a low on the week of, I believe, $4.06, which was hit today on Friday, January 26th. However, there's one thing that might stand out to you if you look at the chart, and that the lowest low was not hit this week. The lowest low was actually hit last week on January 17th, which I believe was Wednesday, and that was actually when we formed this bottom. And from that bottom to the top here, that represents about a 20% move upwards. So I think that's pretty good. There is some momentum there. However, we did lose it this week. We did pull back, but that could be a double bottom, just like how we saw this double top up here. We're seeing what looks to me like a double bottom. And, the thing that really stands out to me about it being a double bottom is actually if we switch over to the weekly time frame, and we can see that last week's candle was, what looks like this very narrow hammer candle or dragonfly doji with this big tail coming down. And since that was at the bottom of this downtrend, that did suggest a reversal. And we did get a little bit of that into the beginning of this week when we saw that top testing the bottom of this channel, but we ultimately couldn't hold that. But as you notice, we did not close the week below 401. So we have not negated the reversal signal that we saw from last week's candle. And so while it does seem bearish, it does hurt to see the price down at $4.07, being down only 0.25% on the day. But over the course of the week, we saw it come down nearly 10%. That hurts. That sucks. But it could have gone lower. We could have seen a new weekly close lower than last week's weekly close Actually, we did see that, but we didn't see a weekly close lower than last week's low. And so I do think that could suggest that this reversal that we started to see is still in play. And if we notice too that the open on the 17th, marked by this yellow line, was at $4.07. That's what we closed at today. Yesterday, we closed at, let's see, $4.08, a little bit higher. But we have not made a new close. We have not brought a candle down lower than this candle that came down on January 17th. So I think that's a really good sign. And I do think that the prices that we're seeing now, I think it's a bargain. I do think if we take a step back, it might take a couple months. It might take longer than that. But I do think we will be getting back up to fill this gap that was formed between November 8th and November 9th. I do think we will be getting back up there. And so, I just wanted to share my perspective on the stock because it can be pretty tough to hold, but I believe in it and I believe in the community. And if you found this video helpful, make sure you like it, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching and happy weekend.